All right, everyone, welcome to the stream. A little bit of technical difficulties, but that never stops us, does it? So let's get into it. I mean, we've got a big, wild market at the moment. Obviously, the bull run on hyperstocks has been as much as 20 to 30%. Netflix, Square, Google now with the share split. My goodness, that's a big deal. And we'll be looking at that. We'll be obviously starting off with some currency commodity discussion. Then we'll be getting into some indices. Then we'll get into the stocks and the crypto. It's a pretty wild day and a pretty wild couple of sessions. And we don't really expect the volatility to stop anytime soon. There could be an increase in volatility in just the next 24 to 48 hours coming into our jobs numbers on Friday. So Tyrone will be with us very shortly. But let's just begin here by talking about these currency pairs. We'll start with the dollar index. So a little bit surprising that it's dropped back so severely. This is one of those things where a lot of people would have expected it to probably bounce off this zone, this 96.70, us included. You know, resistance becomes support. That's the general concept. The one thing that we always talk about is if you're looking at this on a daily, is there any harm in going into a 15-minute chart and a 5-minute chart and just putting in that little bit of extra effort to look for the turnaround story? And that wasn't present. You can see it dropped straight through the zone. A great session or a great thing for the community to always understand is that these types of levels are key levels. I mean, when we hit them, yes, we know, yes, we're confident in this idea of purchasing it here. But the problem is always going to be, this is where we need that turnaround story. So the trough, the peak, the higher trough, and of course, the higher peak. We need them to happen here. If we don't get it to go, then it's one of those things that really I guess it defines probably a very successful trader with sometimes a bit more of a beginner. If you just buy this level all the time, you'll tend to have a lot of these kind of weakness ones because we know that everybody sees this zone. And because of that, we do need the turnaround story. So we should have Ty with us now.
Yeah, can you hear me okay?
There we go.
Can you hear me okay? All right.
Yeah.
I take full responsibility for that. I tried to set the link up while Thomas was away with the obvious outcome. So it's all good.
No, it's probably a bit on me. I was trying to set the stream key up, but anyway, the thing is fandangled, okay? We couldn't get it going, but that's all right. We're here now. Euro, US dollar. So Ty, we're just really talking about these big switches in currency. The euro went short, Fed announcement, went reversal. And I think a lot of people are probably going to be confused about the odd more than anything else. And I've got some thoughts on that one. Obviously, the end of QE, but no rate hikes yet. Yet the Australian dollar goes up. And people think, well, how does that happen? There's no interest rate hike. The end of QE is the answer to that one, isn't it? If you take away quantitative easing, you pretty much initiate this idea of less weakness to the currency itself. So actually it's a bullish sign, and everybody, I saw comment sections in the AFR, I see comment sections everywhere. Time to short the odd. That's literally what the comment section said, Tyra. And I thought, oh, they're all going to get owned.
It happens all the time. It's been happening for years and years and years. The Aussie reacts completely the opposite to what you would expect after the interest rate decision happens. It's been the same all the time, hasn't it? Mm-hmm. It's unbelievable. Yeah. And people expect it to absolutely tank. It's true. It's the expectation, but no, it's not this time.
Yeah, this was a pretty decent rally here. Now, I do expect, and I think you do as well, that the DXY will have a resurgence moving through the year as we see the Fed initiate tightening on top of interest rate changes. But that's the initial reaction here. We see the odd move up. We see the euro move up. Are there trades for us? That's going to be a really tough one. I mean, say this Australian dollar, it's a tough trade here, mostly because we have supports that are becoming resistance. We could look for a bit of a short if we got the right lightning bolt down here, or we could look for maybe a clear of this level, pull back, and then a long position. I think you're at the critical coming into today's session, aren't we, Ty? We're at that zone.
Yeah, you are. And look, at the end of the day, I mean, interest rates or not, the Aussie played out perfectly. Like it went down and touched the 70-cent mark, which we expected it to do. We knew that it was really, really strong support there. And it's bounced off accordingly. Like it went pretty much, you would have gone through the videos. We said when it goes through the 70-cent mark, it's probably going to go to about 60. It'll shoot through. It'll overshoot it by about 20 pips. It always does. It pretty much did that, and then it gave a big engulfing candle, and up it went. Now, sure, it's up at the 20 now. Like, you know, it's got some headwind in front of it now. It's got a 20 moving average on the daily. Yeah, there are things there that potentially can give it some grief, but this move up to the 20 moving average should be no surprise. Like, there shouldn't be. And if you go to the smaller time frame, you would have seen the lightning bolt happen. So realistically, I think it was a pretty good trade.
Excellent trade here off the bottom. Series of higher lows.
Bang. Yeah.
Pretty much what we always talk about. Great consolidation, and then a breach, retest, and movement through. This is if you find, and it's just the same. It's all trading is understanding that there are key areas, e.g. here and here. And if you see turnaround stories like this, let's just break this one down, Ty. What a great deep dive we can do with the community actually here. I'm seeing it. I know you're seeing it too. We have consistency here. The 50 exponential moving average consistently keeps the odd down in this entire short period. This market's basically clearing down. It continuously moves down here. And we've also got a trend line. We have a trough. We have multiple peaks. We have a higher trough. We breach the zone. We breach the 50. That's step 1 of recovery. Step 2, breach the trend line. Step 3, get the lightning bolt. Step 4, add a key level of support. That's a trade. Yes, I like it. And that's the type of one that you really, really, really want to be involved in, isn't it?
It is. And you're going to see, I mean, look, you're going to see those lightning bolts all the way up. I mean, it's just, if you go to the 1 hour, I mean, I like looking at the 1 hour time frames really when we're looking at a serious, shift off a support zone. And it's giving you also almost the exact same pattern, really. I mean, you can see there, you get the series of higher highs and higher lows. Once price breaks above the 20 moving average and is trading above the 70 again, off it goes. Yeah, and then it comes back and finds support on the 50 if you missed that first one. Very, very similar pattern, just a bigger time frame and a more important time frame, really. So really, really good scalping. And, look, if you were aiming for your take profit, this is the obvious area it was going to go to. The 20 moving average on the daily. It's a role reversal zone as well. No real surprises here. And I think it was a pretty good trade, actually.
Yeah, the trade up to this point has been pretty good. The trade at this point, you'd have to say a little bit indecisive. I mean, yes,
I'd be waiting now. I mean, it could go long. It could break this level and go long just as easily as it could go short, to be honest. I think you need to be taking your profits, or at least definitely at some point here, locking in a good portion of your profit, maybe either leaving the rest to run or looking for a reversal. But again, like we always say, when there's uncertainty, let the market lead the way, let price action lead the way. When we get a lightning bolt of any significance out of this zone, you know which way it's going, right? Whether it's going up or whether it's going down. If you ask for my preference, I want it to go down because I think going down to the 70-cent mark is a really easy trade again. Break down past those moving averages on the 1 hour and happy days all the way down to 70. But if it goes up as well, that's okay as well. It really comes down to what price action does. Don't try and preempt it. Just let it play the game and then jump on board when it does actually pick its direction.
Speaking of games, we also have a potential resurgence here a little bit longer on the euro. It did break underneath, closed underneath, and then the announcement itself pushed it back up. And this could be one of those big moves where it comes all the way back, tests this great trend line, which was one of the shorts, I think, from a few weeks ago. We discussed this idea. And then it's comes back here, retests the 200, and then basically sells off or retests around this trend line. That could be a very possible scenario. So I think if you're a currency trader, the good thing is we suspected that this year is going to be good. It's going to be volatile due to central banks making big changes. Obviously, interest rate hikes, or quantitative easing changes create volatility. So something around in this range, highlight it up, look for the turnaround story, and that would be something there. I haven't really been doing too much currency trading. I think the stock markets have been where it's at in the last week. It's been phenomenal stuff. But there's always opportunity in all markets. It's just whether you know what you're looking for. Big bounce here on a few of the yens. Nothing to really write home about. Back at resistances. And I think that's across most of the yens at the moment. They're kind of at some of these resistance levels. Anything else in the currency world you like, To?
The only one, look, the US dollar CAD, which is the one I did my Tuesday market watch on, it's just kind of, the news is kind of stuffing with it at the moment. It's basically at the entry point, really. It hasn't gone anywhere, but I'm not taking it out either at the same time because it's at, like I explained in the video yesterday, it is at a support zone that I'm pretty happy with. So although it hasn't really moved. It looked like it threatened to break out and didn't, and came back to the entry point. But I'm still not concerned about it. It wouldn't be one that I'd be taking out, because I think it's still at a level where, if it's going to bounce, it's going to bounce from here. And if it goes down, well, so be it. But I think there's enough evidence to say that it could definitely get off this level. So I'm still comfortable with it.
Okay, so US dollar CAD to the buy side. I assume you want it back above 127 ASAP. Would be the idea.
Absolutely. And yeah, absolutely. Aiming for around that one. It's only a scalp. We're only aiming for probably the 127.80 area. We're only looking for a scalp. But I think it'll move there. It can get there very, very quickly. But we know what it's got to do. And it's still at the right place to do it.
Yep. Okay, cool. Well, that's one that I guess is there in the currencies, but we'll probably skip through the currencies a little bit here and move over to some of the commodities, because there is a lot to discuss. We'll discuss gold. It's been, frankly, terrible since the Fed. Look, gold has disappointed us in this seasonality. I think you can truly say it's been disappointing. Look, you could have reduced your position ahead of the Fed. That was valid. But there are some things that I think are annoying. The 1830 break, obviously the idea was to take it to 1870. Now, you always have a problem with the Fed. That was the big bit of news, turned out to be the one that was volatile. You can descale yourself, maybe lessen your position into that news. Generally, news will help you with this type of trade. If you have a longer term approach where you're not concerned yet because it didn't breach below the longer term trend line, but it's unfortunate. Where I like the trade at the moment, if you want to get into this metal, and frankly, it hasn't been great. I'm going to go back for it next year. I'm still going to go for the December, by the way. We don't stop playing the seasonal approach. If we get breaches, if we get the right TA with the seasonal data at the same time, we still will go at gold again, November, December, January this year, if the right things happen. Because, Ty, you don't just drop it because it doesn't necessarily work out perfectly one year, yeah? We got basically a break even. I could think of worse things.
It was pretty much a break even, but it's certainly you would have been hard pressed to lose on it though. It did enough to get you out, surely.
Yeah, if you weren't just going for, let's say, more of a swing trade, if you were sitting there for a multi-month approach, then you're hard pressed to lose. But at the same time, you're not sitting there going, oh, yes, that was a bonanza of 10, 15%. I guess you're still beating the stock market, actually.
Yeah, well,
if you'd invested in gold in November, December, you're still probably above where the stock market was then. So theoretically, the rotation could occur. So I see this kind of little, I guess you would say, base formation forming here on gold. If we look at it, it did breach out, went and tested just below that previous support. Became resistance, and I think it's actually looking like it wants to do the turn story here, Ty. This is the zone. This is the area. If you're still a bullish gold, it's got to buy down. This is it. It's really the time. It's got to shine.
Yeah, no, I agree. This is the time.
Yeah,
this is the time.
It's almost past its full seasonal now as well. I mean, we're in the last month of partial strength here for gold from a seasonality standpoint. January tends to be the best. It was looking really great. And then, of course, that happened. So, yeah, I like the base. I think it's forming okay.
Yeah.
Where we certainly didn't get it wrong was iron ore. That was phenomenal. The moves on iron ore, the moves on energy, the moves on generalized commodities across the board over those November, December. We smashed it compared to the rest of the market. It was really great to see the community get behind so many of those things. Let's take a look at silver. Pretty big trajectory here, line. We've got a pretty phenomenal kind of curve going on. Do you think it can hold that, Ty?
Yeah, D-Day is coming for it like right now. It's right at the place where if it's going to fail, it's going to fail very, very soon. I think it's actually got. I like this one better than gold, to be honest. Mm-hmm. I think this is still probably the better trade. We need this candle to close. Yeah, this is the we want to be seeing these moving averages broken now. We need to get above these moving averages, especially that 200. See how they're all really, the 200 and the 50 are basically touching each other now. A little bit of work to do to get past it, but if it gets past it from there, I think the upside is quite nice. And I think it's almost an easier trade than gold, isn't it?
Yeah, probably. I mean, both will work in some type of unison, but silver's been a little bit more aggressive, I think, due to the fact that it's used a lot more. I mean, gold might make Rolex watches and your favorite jewelry, but realistically, silver's used predominantly actually in infrastructure and industrial building as well. So it's got more use there. And then we know the demand is coming back into that field, as we've seen in iron ore in recent weeks. So yeah, looking better here. We've got a question from Daniel. Says, do we need gold to touch 1680 before it's ready to wave up again? So talking more about like an Elliott wave style of thought process. I don't believe so. I mean, that's basically going all the way back down to these previous kind of low levels that we had before. I don't feel like you need it to go down there. I mean, that would be dire. That would force it. That would
I
basically
would
be
not.
a new low hit,
I would
and
not
that's
enjoy
bad.
that. Yeah, that
No.
would not be. That would not be really very technical at all for any long bias. In fact, if it gets down there, I'd be starting to worry about gold, to be honest. Yeah, anything below 1750 starts to scare me. In regard to where it's going, I'd like it to be holding that 1750. Yeah, getting down there. I mean, it might make sense in some wave patterns, but I'm not so sure gold is that technical that it actually
follows the giant waves.
The big waves. Yeah, I think there's too much. There's too much influence on gold. The problem with gold is there's so many different factors along with technical analysis that make the wheels turn. And I think those wheels turn a bit too quick for those very big wave plans. That's the only thing with gold for me.
So energy traders will continue to rejoice about this massive resurgence. Look, I have not been as bullish in this aspect here as we were leading into the 85 for obvious reasons. Number one, great resistance. We did trigger off. But my problem is OPEC. And OPEC's coming out and they're going to have their little discussions and oil will do its thing. If you're bullish this, I mean, look, from the chart perspective, it's grinding higher. But there's a lot of weird volatility going on here, Ty.
There is.
We've got rejection candle, long leg doji, long leg doji, long leg doji, long leg doji, rejection candle. I guess a breach on the day traders here. We might see that kind of rally and then get into the 92. That is our target. If you're long energy, that's still the zone. But I'm not loving. Like, it's one of those charts where if I see this.
The easy trades are done on oil. Like we've done, we've done really well getting it up there. Like the 85 was like, that was just a bonanza. We've had a bonanza trading on oil really, but now it's at a place where I think I just rather wait and see. There's an easy way to look at it and just say, you know what, let it play the game. Let OPEC come and screw things over for everyone. And when they've done all that, then we start trading it again. But I think we don't want to be relying on things we can't control. And not that we can control the market in any way, shape, or form, but at least if we have an understanding and idea of what it should do, it gives us a far better advantage when it can be turned on a dime because of an OPEC announcement or a meeting that they manipulate the market. We know they do. No one's going to hide behind that. They can change it around to suit themselves. Where that could happen very, very easily, and that's why you got to be very, very careful with it where it's at now.
We've also come off some seasonal strength here for something like energy. Feb, March, some weakness tends to come in. It's not as bad as the August sell-off, but this is the averages here for energy. Then April tends to be that really great month for the energy sector. We do need to remember energy is so far in front of any other sector right now. The rotation, we believe, is just around the corner from energy being the super outperformer to starting to underperform. It may not happen just yet, but it's in that kind of top 10% left in it, 15%. It's that time where we start to say we pull back from the position a little bit to a degree. So yeah, that's going to be something we're watching. So US oil kind of still grinding higher. If you like it, you're looking for a breach through there, and that's kind of the way we look at it. Interest rates and VIX. So look, we've discussed the VIX a lot. It's coming down underneath. This is the time where if the volatility is going to come back into the market, it'll do it now because we're getting close to that 20 zone. There are still some concerns. I mean, basically all the things that everyone was concerned about last week, other than earnings and the big FANG stocks, which we always argued would be good here on the channel, specifically Google, amazing stuff there. We've had this phenomenal kind of idea of everything's going up, yet we're still seeing the interest rate yields hold high. US 10-year yield is still holding high. The 2-year is still holding at a higher rate, yet the markets are going up. So the question becomes, is it a bit of a bull trap? Is there some kind of secondary pullback? We're at 15,200 coming into the open here, Ty, for the Nasdaq. Phenomenal gains. We totally expected that it would get into this zone. These are our two zones. But the US 500 is the one I want to look at. Weekly 20 moving average tested from the bottom up. This was respected, remember, 5 times on the rally. And at the same time, we're going into where we've got the most amount of calls. So what are your thoughts about coming back up to this zone? 61.8 fib, previous supports, resistances, bunch of calls sitting at the 460.
Yeah.
And yeah.
I'm gonna actually, before we actually touch on the S&P, can we go to the Russell? Because I think that's actually more telling. I just want to show you something on the Russell that's really got my interest. I talked about this at the webinar last week that, we all predicted as a community last week at the webinar that, that it was going to bounce off that level, right? So we're no surprises that came off the 1960, but it's also right now at the time where it's about to touch a 20 moving average, right? You can see it's not far off the 20 moving average now. If it passes and pushes past the 20 moving average, it's got one hell of a wall at 27-ish, right? So that area there, very, very important. I'm looking at the US 2000, which the numbers are a little bit different, but similar, the same chart, right? So the 20 moving average is a really, really important zone. You'll find that'll be a 38.2 pullback of the last swing. Okay. This is what I'm watching very, very carefully. If it goes busting through that 20 moving average and starts looking for that 2100 level again, then for sure that the S&P and the Nasdaq are probably going to be really running at that point. But this is a very, very important index, and I know we pay a lot of attention to it. A lot of people don't, but this is a bit of a telling factor because this is almost not as important as S&P 500, obviously, but in a way, it's probably a better reflection of the real economy, right? So It's a very, very important zone right now. 38.2 pullback on that move down. It was a very, very aggressive move down, obviously. It is still in a downtrend, though, right? Make no mistake. This is making lower highs and lower lows on a daily chart. So, it's still a long way from actually being back in an uptrend. And that has not reversed yet. It's still got a fair bit of work to do. So I think that before you place any trades, on the Nasdaq or the S&P 500, I think that you should have this as at least a chart on your screen. You have to trade it, but have a look at what it's doing. And because to me, this is actually the clearer technical. This is actually behaving itself from a technical standpoint better than the other two. Because I think there's a little bit less noise. What do you think, Tom?
I think it's Wyckoff. Look, we've talked about it on YouTube a lot. Wyckoff full-on distribution. I mean, this is the classic Max Payne kind of, and even we thought it was a breakout that could have gone longer here. Then it turns around, goes underneath. We've got the 20. We've got the previous supports. And I've been saying this on the channel. It's certainly one we're looking at. I think that it really shows whether there's a broad-based recovery. That's the big thing. It's the 2,000 small caps. If they are not healthy, is the market actually healthy? We've got to always remember, is the market healthy if this particular index isn't recovering? It shows us weakness in the back end. It shows us weakness in the earnings of the smaller caps. We could argue all day that the top 20 FANG stock or the top 20% of the S&P 500 is doing great, which it is at the moment, but that's not really the test of the broad market. This is.
Well, what you've got to ask yourself when you're looking at these is, what is really signaling the strong economy? Because at the end of the day, the stock market's all about the economy, right? So what is really going to signal the strong economy? The 2,000 small caps or the Dow 30, where you've got the big 30s in there. It's exactly. So realistically, this is so important. This index is so important to watch, and in a way, it's a lot cleaner. So I like it. I actually, I think it's at a good place now because it's going to make a decision one way or the other. The decision will be made very, very shortly. It shows a lot less noise for mine, and I think it is, like Tom says, it's a far better representation of the broader market. I think that's very, very important to factor in.
Yeah. So somewhere around this zone, this 4,600, this 20 moving average on the IWM, which is pretty much where it's going to open. This is where we expect, if the sellers are going to come in, they have to come in here. Now, it doesn't mean just go, let's sell that. But we're going to open at this resistance. You can see the markets are running into this level. They might go for a little bit longer. But Tyron and I, we always talk about this. Use your trading system. Recognize the key zone, like we have it highlighted, like we have it on the IWM and the Nasdaq. And when you recognize that, we look for the turnaround. Peak, trough, lower peak, lower trough. Part of the reason it's going up more than people expect is because there's so many puts down here. If you missed the videos, I mean, we pretty much proved it with this, that retail traders have been absolutely smashed in the last 2 weeks from bearishness. Thank goodness we didn't go super bearish on the markets, and we were still very comfortable with our 50 exponential moving average on the weekly, because look at what happened to so many poor people. The puts, Ty, were almost double in size, was 38% higher than it was in 2020. 2020, we had a full-on closure of the world without stimulus at that point. Here, we have some guy saying, hey, we might raise interest rates a couple of times, and they won't even normalize back to this rate over here. It's insane.
Madness.
It is madness. I've never seen anything quite like it. It just shows how many participants are in the market and why we've got to think about where's the maximum amount of profit to be made by everybody. Why are pullbacks during the start of the year? Because guess what? That's not when you get paid your premiums. Why is there generally a Christmas rush? To get that bonus money, Ty. We love the bonus money, and that's what you do when you're a fund manager. You want that bonus money.
Yeah.
So
that's how they make their money. That's how they hit their performance targets.
Yeah,
that's a well-known fact. It's a big rort, really.
Yeah,
that's how they do it.
So we've got some big stories coming through. We've obviously got Google 20-to-1 split. If you're not aware of that, that was the announcement. They also had their best earnings coming out. This was the one that we suspected would be one of the best. I didn't think Apple would hit. I actually thought it would be Google hitting very hard and Microsoft hitting, and the rest I wasn't too sure about in the major FANG. But this one did do it. It ended up going for the split, which is fantastic for the stock. Now, we know that every time these splits have happened, I've got them up here for you, we've tended to get that buy the rumor, sell the fact. Here's the announcement of the split. The huge runway, the split itself, all the way back down. NVIDIA, here's the announcement of the split itself. It actually sold off a little bit before the split, but you can see that huge buy the rumor, sell just before the split occurred. Then over here, we have obviously Apple, one of the first ones to do it. The announcement of the split, off it goes. Just before the split or around the split, huge dump. So this buy the rumor, sell the fact of the split has been consistent. The problem is, look at the last. So we had, this is one of the first ones. This is one of the second ones here, Tyrone. So this is the 2020. And then we have the NVIDIA 2021. Now, the difference in this one was it sold before the split occurred. Okay, so it bought the rumor and it sold. I have a suspicion that it's going to play slightly different. And I want the community to let us know. What does everyone else think out there? It's going to maybe play a little bit different to previous times. A lot of people know this now. They all buy it up ahead of the split. I think it might do something similar to NVIDIA, where it might run for a little bit here, but then it will sell off well before the split itself. This is the first of the cracks. It just makes sense, yeah? What do you think, Ty?
Yeah, it does. No, it absolutely makes sense. And history is always the best guide, really. This is why we always look back and see how did similar events actually work out. It's always the best. It's always the best guide, and very rarely lets you down, actually.
Yeah. Here's Lunch Money. Says split coming in July. Ride it to 3,500 till July. So obviously riding that idea of repricing itself. The good thing is that if they offer good guidance as well, and I didn't read the actual report, I do have a little bit of Googles at the moment. But if that continues to run through, and we get this concept of the market continuing to really strengthen here in Google and push it to new peaks, which it's going to do today, then I think it's going to be before the split itself that it sells off, similar to an NVIDIA. So be careful there. Some other big targets are going to come out now for splits as well. Will we see, since Bezos is technically out of this company, Amazon coming out with a split? That'd be huge for this stock. It kind of almost needs it. There's one thing I suspect they'll do. I think they're going to increase the price of Prime. Prime is too cheap.
No, surely not.
Yeah. Sorry, Ty. We're going to have to cancel Prime. I think they'll increase the price of Prime. It's almost assured.
Prime's the only one that I actually don't feel bad about paying.
Are you getting annoyed at Netflix, by the way?
Yeah, very annoyed with Netflix.
Yeah, it's getting expensive.
It's getting expensive. Stan's getting. We've got every streaming service that's actually available in our households. You can probably imagine with 2 young kids. Prime is the only one I don't feel guilty about.
What's Disney at nowadays? $10?
No, Disney's
15?
okay. Disney's all right. And yeah, while you've got Boba Fett, while they're doing the new episodes of Boba Fett, it's all good. Disney is all good.
Oh, okay. But the problem with the Boba Fett series is the only good episodes the damn Mandalorian series.
No, that's the irony.
That was so much better. Oh my goodness. Anyway, the Prime, I'm pretty sure they're going to increase the price, and this could actually hold Amazon. And Amazon, God, I mean, if you're looking at it from a long-term investment, it's hard not to like it at this price. I know things can go lower. Like, don't get me wrong. But it's hard not to like it at this price when you look at let me just quickly bring up this chart. I know we're kind of rambling here about a few stocks, but sometimes people like that. Do you guys like this?
I think it's important.
We like
I think it's
important
important we cover it.
Well, here's the issue they've had. They've got one slowdown month. Okay, so one slowdown quarter here. Their valuation is not obscene. I mean, it's been valued much higher, and as it starts to become more profitable, it's actually, kind of valuing very similar to how it was valued before this whole pandemic. Now, it's grown at a rate that probably justified that initial increase. I mean, we obviously see 2019, it was sitting around 2000. It grew 50%. And that's fine, because guess what? The EPS grew actually around 100%. It's got plenty of new ideas and new concepts in its repertoire to move forward with. So I find it hard to believe that Amazon won't either sit on the same or give improved guidance in the future, or something that's going to be turning around for it. Plus include increasing Prime. They've got me now. I'm sorry, I can't leave Amazon now. They've got me in Australia, and they've got a lot of people. So I feel like this price is much, much fairer than it was. And PS ratios will show you something pretty similar. It's coming back down here to more that 2017 price for the sales ratio. And again, increasing every single time. It's not like this has been decreasing. So as long as this increases, is this expensive fundamentally? You're actually getting a discount based on just this alone. And yeah, I'm finding it kind of compelling in that action. But let's look at the technicals. We've got the base like the rest of the market. Today, it's up 2.85%. It's I think people are just getting bullish on it because every other FANG's been so good. And yeah, I mean, it's going to have probably a little bit of resistance around this 3,200. And then we might see the turnaround story there, like the rest of the market. But it really depends. If you're an investor, you look at it totally differently to a trader. A trader, I'm not going to trade this. An investor might come in and say, oh, I like this price. I think long-term it's pretty good. We've found base. I'm happy with this price and I'm going to hold it. A trader, there's better stuff than this one. So just remember, trading and investing, always separate them through. Let's see what everybody else says.
Definitely important. Must be.
Darth says, Marvin says here, I hope no one is from Amazon's watching tonight. They might get ideas. Yeah, about increasing their Prime service. All right, let's go through some other hyper stocks here, Ty. Everything kind of reaching. Look at this. Look at this. Oh, wow. Square down 7.77%. Okay, so hyper's still getting belted around here. I'm going to have a look at a few other hypers now. I was just about to say the 20 moving average is too much resistance for these at the moment. 20 moving average, 20 moving average. And when we look at ARK, check this out. It's very similar. So ARK is, we don't have the pre-market data, but this is kind of like the gauge maybe for hyper stocks. They are recovering off brutal losses, 60, 70% losses. But this 20 moving average, I think that holds one of the biggest keys. What are your thoughts here, Ty, about this drop in the 20?
Yeah, it's an interesting one, isn't it? It does tell a compelling story. There's no question about that. I love peaks and troughs lining up like this one has. But yeah, it's right at that zone now, isn't it? Like it's, long
leg doji, decision made, question mark?
200. Yeah,
200
I mean
weekly as well, and a pullback almost to pre-pandemic highs.
I want to see it get. I do want to see it get over that trend
20.
line.
The trend line and the 20.
Yeah. If it gets over that, I think we're on, and it could be a reversal of, pretty reasonable proportions too. Like, you've got, well, you'd think that the at the very least 90 to 95 would be the first target if it gets up
Solid.
there.
Exactly. Yeah, the gains here are extreme in terms of raw
Big
percentages.
gains.
And that's across all the hypers. They all look like this. Solid brings up the main point. Yeah, it was PayPal earnings knocking square around. So we probably see like some of these other companies still holding. Twilio's holding. Nvidia obviously still going on a massive ramp here. 5% up. Roku will probably be up as well, 2.25. So all of these stocks turning around. Etsy, another one that's down low. I think 20 moving average for all of these holds it. And that's why when Tyrone is talking about the IWM before, these are kind of like the smaller companies. I know they're big, but they're kind of those smaller companies, 20 billion, 10 billion, 5 billion. What we're looking for here is yes, you could be in the big stocks and they're the ones that go first. But if you feel like you've missed the boat, you've missed the opportunity, there's going to be a massive opportunity in these small stocks if we can pinpoint the proper recovery. And the proper recovery is not quite yet. And this is one of the problems that we have in this market. IWM is not saying, well, buy. SP 500 and Nasdaq are saying, yeah, we're long at the moment, but we could easily turn around. And all of the stats point towards a February weakness. We take the stats here that we mentioned in today's video. Big rallies at the end of a month of 4% plus tend to lead to next month being only 30% positive. Guess what we saw in January? That exact thing happened. Bad Januaries, big negative Januaries. What happens in February? Only 33% of the time, that's a bad stat, is the market bullish for that month. Bad stats at points where we're looking right now in the actual face of potential turnarounds. So I think that's what this whole webinar is about today. This whole session is be careful, pinpoint some of the things that you want. Obviously, you've got your investment in your trades. And with these particular stocks and with these indices, they are at critical now. So if we get the right turnaround stories, there could be scalps. There could be day trades to the short side that will be there. And guess what? Even if it goes further along, there is an incredibly high chance you'll pick this level up in only a few weeks. There's no way that I think this market goes like that. Not anymore. No.
Why would it? Why would it?
I don't know why it would. I mean, that would be. We've argued many times that we don't think these interest rate hikes are going to long term affect the market and the growth of the curve. Like, you're still going to get growth, but at the same time, I just cannot see a vertical like we've had previously in other years. And in fact, if it goes vertical, that would be bad for the markets.
That would be very bad. We don't want that, actually. That's very bad. We want to see trading conditions now. That's not trading conditions. That's reach for the sky and hope for the best. No.
So we've got some questions here from Ian. Ian says, love the insight. I'm already in Amazon long-term and looking to buy again. Well, I guess we'll ask the question here for everybody. If we do these types of webinars, and we were even thinking of potentially switching it a little bit to a broader discussion about deep dives. So because we do so much commentary, Tyrone and I do commentary every day of the week, and we do so much stuff, we thought you might like some deep dives in some things we're looking at. So whether that be a little bit of fundamental discussion, a little bit of news discussion, and the technical analysis brought together, and sector discussion, if that's something that interests you, let us know, because we are considering that, and that will be good. Ayong, I think it is, says, hey, Tom, how's the SPX 500 for this year? I'll give my same bullish scenario as I've thought. I think most of the funds are correct. I feel like the US 500 will hit a 5,000 to 5,200 by the end of the year. Tyrone, your thoughts? Maybe I'm pretty bullish, being said.
Yeah, I think it's going to be. When you say bullish, I don't think we're going to see a drastic sell-off, but I'm not so sure we're going to see 5,000 either. Like, I don't know if it's got that in it. I think that it wouldn't surprise me at all to end up, probably where we are right now after a year's worth of trading, and probably see some swings between 4,200 and probably 4,700 again. But yeah, in my mind, especially with the ASX 200, which is obviously what I'm most interested in, from a selfish standpoint, that's almost at what we would consider fair value. So if it plays around and actually gives us trading opportunities up and down, I think that's going to give us some really good opportunities to actually trade all year. And I think that's probably the most important thing that we get, right? No one wants to see a big sell-off. We don't want to be seeing that. I think we've already seen that, and we're seeing the recovery. But what we don't want, and what I was hoping wouldn't happen, it doesn't look like it has, well, not yet anyway. We didn't want to see a big V-shaped reversal, right? We didn't want to see the market sell off the way it did, and then all of a sudden, bang, right up at the all-time highs again, because that puts us in the middle of nowhere. It makes it very, very uncertain to trade forward. And we're always back looking for those selling opportunities, thinking, oh, it's only a matter of time. It's only a matter of time. So what we want to be seeing now is some actual, trading environments sort of kicking in where we can actually predict levels with pretty good confidence. And we're getting those levels. I like what these indices are doing. And I think that at the moment, very, very happy with where they're at, actually. I think there's good opportunities everywhere. Is the Aussie 200 going to short from the 7150? Probably.
I thought you'd come out with something like definitely will. Tyron probably has some like little weird short spread sitting that he'll put on around there. Who knows?
Speaking of spreads, we've got to talk about options. We've got a little bit of housekeeping to do, so we'll have to get into that in a minute.
Okay.
But yeah, look, I like the levels that they're at, but more importantly, we're not guessing, and I think that's the thing you got to take away from this is that we're going to wait for price action to tell the tale. If price action goes up above that 20 moving average on the ASX 200, then we start looking for longs again. But until it does, we're not going to trade it. But my preference is for the short. I'm quite happy for it to get back into the low 7,000s or even in the high sixes. That's my happy place. Do we have spreads there? Yes.
Yeah. So I thought Tyron might mention something like that one. So the Jets here, this is not an unlost sector for me. I still think that this provides an interesting pinpointed potential here because we have that chance of recovery. So remember, there are a lot of sectors within sectors and subsectors, and obviously semiconductors, one of the best investments you'd be making for a decade if you're in that. But Jets could still have a nice recovery in it, and it's held that support amazingly well. So there's going to be so many great opportunities here in 2022. And I think that, Tyron mentioned that there's going to be a lot of sideways action. There'll be ups, downs, and all arounds due to the midterms and all of these other things. But it's the traders year. And that's why we're still bullish on the market, but we are seeing the signs of too fast, too soon, good chance that people are feeling the FOMO. And I can see it in the comments, Ty. The actual options right now are saying more puts than calls. Okay. So the retail traders are still stacking puts. We can tell easily by looking at 2 days. This is Monday. This is Tuesday. Where did all of this random puts come from? They came from literally retail traders still being bearish on the market. Bull trap, bull trap, bull trap. Then all of a sudden it goes a little bit too far for them, which is probably going to be today's session. They all start going long, and I bet you this strike gets bigger tomorrow by a decent amount. What are your thoughts? I'm gonna put some I'll put a coffee this strike goes up considerably.
Oh, last of the big spenders.
I never bet much. I even bet my dad on the Corona numbers. I bet that a steak sandwich. I won easy, but I should have done better than that.
That was an easy one. No, I agree though. The retail mentality, that's how it's going to play out. It always does. The fear kicks in, then they think they're going to miss out, so they start going long again, close their shorts, and then next thing you know, what's going to happen.
Let's see if we can pinpoint some of the manipulation going on purely by looking at the options market. It's really the only reason we look at these numbers. It's to figure out whether our TA is in line with a big call level. And when it is, then we look for that clear thing where maybe we see an increase here. We see it come up to the resistance. The TA is number one. The turnaround occurs. We get excited because obviously we place our shorts. And then this strike, it might be ballistic by the next day. And when you see that type of thing, then you feel a little bit more confident that that was probably the correct high. And there's less chance that it actually turns on you, especially for that week. And it's even better if the next week there's a ton of calls sitting on that strike as well.
Yeah.
So, Ty, we'll just quickly do a few rapid fire, I guess, analysis points. Netflix was a pretty decent pickup for longer term investors. I still think that's not a bad level. Be careful again. Even Netflix has come in here 460, so around 460 to 480. We do expect some problems. Again, it's in line with the rest of our market thoughts. Big bounce, great rally, potential for pullback. And a few people have mentioned PayPal. Yeah, absolutely shocking result here. 146. You can't even pick the bottom for this one. We almost got a base. We had that accumulation. We never breached. It's the importance of waiting for confidence, and it's been incredibly disappointing. But yeah, 146 here for this particular stock, not so good. SE also still really low. All these hyper stocks, these 20s. I do like just quickly Crowd, Net, these cybersecurity companies. I think they're well priced at this point, even though they're completely crazy on many metrics, just due to the growth after so many companies have gone online. Things like Crowd and Net are sitting around, but they're not really great trades. They're more philosophies, if you like that idea. Bitcoin, we'll do it quickly here, Ty. Look, crypto, it's as simple as this for me. There's a massive downtrend. You can just chuck a line on it. Anyone can see that. Blind Freddy can see it. Anybody can see it. We have a long leg doji sitting on the 20 exponential moving average. We have a 20 exponential moving average. We have what could be even a flag in terms of form. A lot of people have called that. It doesn't really matter what we want to call it. We've got resistance and we haven't breached it. And no matter what anyone tries to say to me, the crypto market is controlled by Bitcoin's bullish or bearishness in terms of markets there. So that's a pretty big thing. Now, I think you want me to bring something up here, Ty?
Yeah. Can you just click on that link? I just want to show everybody the boat that we're going on the conference. We are so excited about that.
I'm just gonna zoom in here for a second.
I know you people thought I was joking. I know everyone thought I was joking when I said this boat's called the Evolution.
I
I
don't want this person. I want to write on the screen. Keep going, Ty.
Yeah. This boat is dead set called Evolution, and we are renaming it FX Evolution for our day. We've got this girl for the whole day. It's taking us wherever we want on the reef. It's a private charter only for us, and only for the conference delegates, of course. There's going to be like scuba diving on it. We've got a barbecue lunch. It takes 126 people. So there's going to be so much room just for us. It's going to be absolutely awesome. So yeah, I just love that we're gonna put that FX there, dead set. So this is the third day of the conference. We are getting the email out because we're just finalizing the final details. But for all of you who are coming, this is included. Okay, so change your accommodation, change your flights. All the planes are doing it. Just do it. The Monday.
Stop right there. Did you say included? I like free things, guys. So did you say that we're paying for it?
Yeah, we're paying
out of our own trading profits.
We are paying for this. We are paying for this boat. So it is included in the conference fee. The conference fee is not changing. So everyone who's paid already, this is included. And anyone who joins, obviously, and who wants to come with us, it's only in 5 or 6 weeks now. We are dead set. This is a boat that we're going on. So we are very, very excited about that. It is going to be the best conference the world has ever seen. So
what dates does it start again, Ty? March
the 12th, the 13th, and Monday the 14th. So
12th, 13th, 14th, long weekend, free. I want to repeat free. And I want to repeat here, cheap. Considering what it is. So I think it's going to be pretty good fun. Look, Tyron and I are subsidizing it. We're not really looking to make any money off this or anything like that. We just want to make sure that you guys get the best value. We want to break. I'm going to stick around until Tuesday because I'm going fishing. But let's face it. The one thing is that there is a lot of people have not done much for quite some time. This is going to be pretty fun. And not many people can say they've been on a private multi-million-dollar, whatever it is. So big boat. So I think it's going to be awesome fun. And we're going to the reef. I think we've got barbecue. We've got it.
We've got it to do whatever drinks. We want with. We can pick the locations, but we're going to go to the outer reefs, of course. It's an all-day thing. It includes a big barbecue lunch. It's awesome. It's going to be a great time. And I think it's probably one of the most important things is that we, Thomas and I, get to mingle with the people that we talk to effectively on a daily basis. We're always on. And we finally get to meet a lot of people live and have a really good time. And I think it'll bring the group together. So cannot wait to share this. And if this is what we're doing in Cairns, imagine what we're going to do overseas. Whew.
In America, I'm gonna find some of these people that are on the channel. I'm gonna see if I can get one of their boats. I know there's a few people that have some pretty sick boats from America that watch the channel, so we'll find out.
Stephen, I am in training mode, my friend. I am absolutely. 2022 has been the year of the gym for me. By the time the 12th and 13th of March comes along, you are right that it is going to require more room for my guns. Correct.
Don't give him too many compliments, guys. He'll be so excited. I know what he'll do. He'll starve. He won't eat like any chocolate. There'll be no chocolate. No sugar will touch his lips in the next 6 weeks. You watch.
In all seriousness, I can make you this solemn promise that I have not had chocolate since the 31st of December. So all 2022.
When was the last time you ate a carb?
Oh no, I eat carbs.
Yeah. I bet you is there bread? Have you eaten a bread?
No.
Yeah, no pasta.
We've got a conference coming up. How can we eat pasta? Come on.
I always look. Okay, I can promise you I will eat pasta before I come. But look, I've also hit the gym, though I've got a much worse base to come off. The YouTube does not treat you well, guys. It doesn't treat you well.
Yeah. See, as you can see on that boat, it's got a very nice sun deck that has my name on it, just like the boat has the company name on it. That sun deck has my name on it. And for anybody who wants to join me, talk crap on the boat while we're snorkeling and doing all sorts of crazy stuff and perhaps looking after my kids, that will be awesome. So let me just give you a couple more things that we need to talk about very, very quickly. The options room, for everybody who's done the options masterclass, the options chat room is now open in the platform. Okay, so you've all been given access to that. Whenever a comment goes through, you'll get an email. The first video went up today. Okay, so the first video for options trading went up today. We're going to start doing those on a regular basis. You can turn off notifications. It's really, really good in that way, where if somebody comments or somebody posts something, you can get an email alert, but you can choose who and when you follow. So you can pick, if you want to just get stuff from me, you can just select me to alert you. If Thomas posts something and you only want to get Thomas's stuff, that's the same. Or if there's people in the room that you want to follow, basically you can turn off the noise if you like, I guess is what you're saying. But it's a very, very educated group, that group of traders, because all of you have done the options masterclass. That is a prerequisite of actually being in that chat room. So it's a very, very good room, and it's going to be a very, very good resource for all of the options traders. Now, Q&A, due to public demand, we want to mix it up a little bit. We are doing a Q&A after Tom finishes his live stream. So rather than doing it at 9:15 p.m., we're going to do it at 9:15 a.m. to look after our friends in the US, because we know that obviously we're not just an Australian channel now, and people have asked, they always say they miss Q&A live and they'd love to be part of it. So we're going to do a public Q&A tomorrow, and we're doing it at 9:15 a.m. Okay, so just be mindful of that. It's 12 hours earlier. I'll put a link in the Discord room nice and early so you can join in and jump it. So everyone from our friends overseas, if you want to join in, it's at a time frame that suits. You've asked for it, so we're going to give it a go tomorrow and see how that works for everybody. So we'll mix it up a little bit, okay? So just keep that in mind. And of course, for anybody in Australia who can't make it that time, it's going to be, of course, recorded, and it'll be up very, very quickly soon after. So that is really good as well. So do you have anything else to add, Tom, or are we does that cover everything?
No, I think it pretty much covers everything. Just again, 3-day conference. Monday, it's on us. The Saturday, Sunday, obviously, we've got some guest speakers. We'll be going through things that we don't necessarily talk about on the channel that much. So some really in-depth kind of seminars, which I think you guys will all enjoy if you're able to do it. It's going to be exciting. It's going to be really, really fun. I'm looking forward to it. Tyrone's fully prepared, or getting prepared. And yeah, I think the options room is very exciting as well. We're going to be posting some key things there. And look, stay tuned for also some big switches to the private community. We're in the works of that. It's probably a month to month and a half away, but we do have big plans here for that moving forward. We're bringing on people, just because of our workload, we want to expand it and we want to make the value even better for you guys. So
the company, look, to share it with you, the company's expanding at a very, very rapid rate. And we really have to, we want to do so much more, but Thomas and I are hamstrung with so much work to actually make the wheel turn. So, we're looking at definitely making it bigger. And in that way, it's going to benefit everybody. So the community is going to be bigger. The content's going to be more. Everyone's going to be a lot happier. Let's just say that. So, look for very, very big changes in the next 8 to 12 weeks. That's going to really start to kick off. But, especially probably after the conference. The conference is going to probably be the big switcher, isn't it, Tom?
Yes. The conference is going to be probably the big switcher. Just after that, we'll probably get into doing quite a few moves. Someone asked about AGL, Ty. Earnings coming up. That's always going to be concerned. Look, we think it's hit the resistance for now. Until it breaches through this, we're not confident in the next levels. But it goes basically 760-ish around this area, previous resistance.
I think it's a different AGL. Aglion Health.
Oh man, I don't know what that is.
Oh yeah,
Aglion Health.
Sorry, David.
American.
We have people asking for AGL all the time. That's our sorry about
Australian.
that.
Yeah. Well, kind of similar to the other stocks in the US market, but it hasn't come through. Well, still earnings coming up. Got a double bottom base here. Don't have a breach. You need the breach. And then of course you've got the 20 as well. There's a lot of recovery. I'd probably break it down to all sorts of time frames. I'd look at the 2 hour, I'd look at the 4 hour. A few other things coming in. So yeah, I mean, it's on base. I mean, the volume, I don't know about that though. 8 days.
That's an Adam Eve double bottom right now.
Mm-hmm.
So, a breach of this level could be nice. I mean, I could see it moving on that 2 hour there. Mm-hmm. If you're looking for a short scalp, that could definitely play out for you, and the target will probably be in line with the next resistance level. So, if you're looking for a scalp there, that 2 hour might give it to you. That double bottom.
Yeah, I think it certainly could. Yeah. So
break above that 50.
Good scalp.
Retest of the neckline from above, bang, happy days, up to 22. Woohoo!
Mm-hmm. Yeah, could be really good returns. So that's it for me, Ty. I think new community in the options. Make sure you're there, and obviously your Q&A change. And if you want to venture up to Cairns and do those dates, please contact support at FX Evolution or Thomas or Tyrone. Probably just contact support. I think support at fxevolution.com, and then you'll be able to book it. There are still some seats. And it's going to be a great time.
Brilliant, guys. Thank you so much for joining us. And I will see you probably in about 12 hours' time at the live Q&A tomorrow at 9:15.
Excellent. Right, thanks so much, everybody. All right, bye.